No, it's at 145%. It will not be anywhere near that number.
But again, 27 cents a share versus the street at 39 cents a share.
Not necessarily. Tesla's one of those companies that those figures don't necessarily matter as much as some of the commentary.
So I think Tesla's best days are behind it at this point.
Nobody mentioned the most important data point, which is they reaffirmed the launch of Robotaxi in June in Austin.
All that and more. So let's get to it. Tesla stock is up in the pre-market a little over 7.5%, currently sitting at $256.10. Now, this is mainly predicated on the earnings call bump that they received last night. But is it the earnings call that is bumping the stock in after hours and in the pre-market, or is it something else?
But they're going to do very well. And I think they're going to be happy, and I think we're going to live together very happily and ideally work together. So I think it's going to work out very well. But no, it's at 145%. It will not be anywhere near that number.
You have no intention of firing Jerome Powell because your economic advisor Kevin Hassett a few days ago said that you and people in the White House were studying this idea of possibly doing before his term ends.
No.
Do you have any plans on doing that?
None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
Needless to say, Trump's comments regarding Jerome Powell and the Chinese tariff situation bumped the overall market significantly. It is worth noting, though, that even after Tesla released their earnings doc, which was a total miss on the top and bottom lines, the stock remained relatively even. Let's go ahead and check out this dismal reaction to Tesla's Q1 2025.
Morgan, this is a miss on the top and the bottom line for Tesla, and a miss by quite a wide bit when it comes to the bottom line. Company earning 27 cents a share, well below the street expectation of earning 39 cents a share. Revenue light of expectations. The street was expecting 21.11 billion. Tesla bringing in 19.34 billion in the first quarter. The release just came out. We're going to go through it right now. Take a look at what we can find in terms of free cash flow, auto gross margins, the numbers within the numbers that are so important, as well as any guidance that the company gives with regard to things like future models, etc. But again, Tesla missing on the top and the bottom line. Not a huge surprise given how weak the first quarter was. But again, 27 cents a share versus the street at 39 cents a share.
Not necessarily. Tesla's one of those companies that those figures don't necessarily matter as much as some of the commentary. I am seeing first quarter gross margins beat estimates, and the FSD timeline seems like that's still on track. What else is standing out to you?
Well, obviously, it's not a catastrophe quarter. I think a couple things to note. Obviously, the miss on EPS and, of course, top-line sales was a little bit of a surprise. But, the noble reaction after hours so far just speaks to the potential of a massive decline or a potential move to the upside based on commentary. So this is a very tricky situation for traders right now in the stock. I think if you look at one of the things that struck to me was the adjusted EBITDA margin, 14.6%. I have on a trailing basis, at least in the last 4 quarters, around 13.34%. So that seemed to be a little bit better than estimated, and I think that speaks to the potential of lower cost of goods sold. Volumes were down, and we know that overall, based on last quarter's delivery numbers, down 13%. European sales have actually been quite low, 43%. That's all based on potentially some political associations with Trump and with Elon Musk and Trump. The Model Y, and this is the challenge with that particular model, is that they're revamping it. So they're losing some scalability in that production. Cybertruck sales have been relatively weak as well. They're looking to revamp that particular model, or even bring out a new, more compatible truck that's a little bit more closely in line to their competitors. But I think the other thing to keep in mind is the energy storage business, which is quite a bit. It's close to 25% of total sales. Looks like that breakdown was pretty good, and services was around $2.6 billion. So It's kind of tough right now because this is a conference call move that is probably going to manifest. But I think the FSD rollout, there was actually quite a successful rollout of FDS in Amsterdam. High traffic orientated, pedestrian orientated areas in urban environments, and they actually had a very successful rollout. Now that was a test run. It wasn't, of course, legitimized because of regulatory approval. That's still pending, but overall, it was kind of mixed because the margins were better, even though sales and EPS were down. And lastly, it looks like, just from what I see right now, they are not providing updated guidance until next quarter for the entire fiscal year. So things are on hold in terms of their guidance for the year. But like I said, they're going to get the stock. It's down 55% since the highs in December, but it's still higher as a company. Price-wise by 60+% over the last 52 weeks. So I think that's important to keep in mind as well.
All right, as we dig through some of these numbers here, I mean, cash and cash equivalents, we got at $37 billion. The margin number was in the 14s instead of the 10s. Energy generation and storage contributed almost $3 billion. Services and things of that nature, about 2.5. Operating margin, a little bit low, and definitely the regulatory credits helped out. But a lot of people like to exclude these regulatory credits like they're monopoly money. And that's just not the case. That's real money that Tesla is going to utilize to make strategies about what they should do next, whether that's investing in AI or even bringing up new models and new lines for the automotive business. Considering expectations were already so low for Tesla, some of these numbers might not have gotten adjusted, but the stock market had already priced in this dismal quarter. However, there are some bulls that might not be satisfied with the direction that Tesla plans to go. Now, if you don't believe Tesla is going to solve for generalized autonomy, that's with the cars, that's with the robotics, then TSLA might not be for you. Don't mind me. I'm just going to be here when you decide to drop that ball and buy some more shares.
People aren't going to like this statement, but Tesla is fundamentally a different story than where it was several years ago. I mean, Tesla was a massive growth story. It was a young, amazingly innovative technology company building cars and software. And now Tesla is a very mature EV maker with a CEO who doesn't work there, who says horrible things about lots of people that won't buy their cars anymore. And the biggest issue Tesla has is people just don't want their products, even though they're the best products in the market. So I don't know how they solve this. So I think Tesla's best days are behind it at this point. And until something really changes in the direction and or leadership at the company, especially with the board of directors, to try to get the company back on track, I see sales continuing to decline, and with that, revenues, profits, and everything else. So energy storage can only save you so much, which it did save them in the quarter because that's been a very strong part of the business. But automotive sales were just dismal.
What about all the other stuff, Ross? All the other reasons that people own this stock, right? The cheaper car that is supposed to be in production by the end of the first quarter, the Robotaxi, eventually the humanoid robots, the AI piece of it all. Is all of that enough at this point?
Well, when you're an investor, you look at the future and you have to try to model out what that future looks like economically. And so obviously a lower priced car was the most sensible thing that Tesla could have built, and then they didn't build it. And now I don't know what's happening with this, but I don't think there's a lower priced car. So let's just move on from that.
Hold on, Ross. Let's just not gloss over the fact. I agree that if Tesla would have built a cheaper, more affordable car, especially in the height of them outselling their production. There was a time where used Teslas were quite expensive. You could sell a Tesla for $50,000, $60,000, even though you bought it for $40,000, $45,000, $50,000. Tesla increased their production capacity, and still these are premium products. So in order for them to get butts in seats, they ended up lowering the prices considerably. Their production wasn't outstripping the demand. You can attribute this to various different factors. The macroeconomic conditions are extremely difficult. Getting down to a price point where you can actually increase your total addressable market with these incredible high interest rates became quite problematic. But you can slice it any way you want. You can say that Tesla cars aren't as good. You can say there's some brand damage. You can say that Elon has isolated some of the Americans. But I mean, the truth of the matter is that the Model Y is the best-selling car on the planet for 2 years running. The company, as far as I know, is the only ones making money off of battery electric vehicles. And this cheaper model that they plan to utilize the 3Y line, in addition to this unboxed method of production that they plan to utilize with the Robotaxi, I'm quite curious to how low this vehicle will be priced, in addition to its aesthetics. Will it just look like a Model 3, Model Y? Will it be a hatchback of sort? I don't know, and Tesla's being quite tight-lipped about it. If I had to wager, these will be more affordable versions of the 3 and Y, like significantly more affordable. Undoubtedly, this will open up the total addressable market. I guess we're just gonna have to wait and see.
That a lower priced car is actually just a used Tesla, which you can buy for $20,000 or so online right now. So if you want a low priced Tesla, it's called a Model Y. Just go buy one. They're all online, used. They're great cars at a ridiculously cheap price. Then you have another problem because then there's so many used Teslas for sale, they have no reason to buy a new Tesla except it has a light bar on it. You know, the light bar on the Model Y and the new Model Y is very nice, but is it really going to convince a whole new legions of buyers when they don't even advertise? No.
That's good for right now, but imagine when these things become driverless. I have a feeling there's not going to be a lot of used Teslas in about a year or so. So this cheaper, more affordable model, probably right on time.
So then you've got robots and the future of cybercab. And the cybercab business is not a business I want to be in because I think it took Uber forever to make money. And now you've got Waymo's, and I'm in an area where Waymo is very active, and I watch Waymo's drive incredibly well every day, while my full self-driving still is this clunky, software driving like a 12-year-old. And so I'm really upset that the software doesn't work, and it's not even comparable to Waymo. So Waymo's expanding all over the world now, and I just don't see how Tesla catches them. And Waymo's got money. And then lastly, I just don't see a world anytime soon where we have robots walking around and doing our laundry and stuff. So if you can tell me when that's going to happen, that's how long it's going to be till Tesla makes money. Well, that could be 5 or 10 years from now. So I don't know about you, but I got to make clients money every year. And Tesla just doesn't seem to be doing what it needs to be doing.
Look, I'm not going to ask you to believe Ross, to believe me when it comes to FSD. You really got to try it for yourself and determine if the software is any good. I don't have a Waymo near me, but I do believe I'll be going to Austin to give it a whirl. Coincidentally, it'll be at the same time I'll be also trying the Tesla service. We'll definitely try to get both experiences on film so you can live vicariously through me. But again, your best bet is to give it a whirl for yourself. As far as Ross's other complaints that Uber's barely profitable, Waymo's already doing this, well, come on, Ross. Uber's business model is going to be entirely different from Tesla's business model. For one, they're not going to have to pay for drivers. Two, Tesla has the ability to manufacture their own robots on wheels that can go out and do rides for people. Waymo's still charging Uber-level prices. Their ability to scale is insignificant compared to what Tesla is capable of doing. This time next year, I would not be surprised one bit if Tesla is outperforming Waymo when it comes to rides. Ross is a fine example of if you don't believe in Tesla's autonomous capabilities, you probably should exit TSLA. I look forward to hearing how Ross's fund no longer has Tesla in it. I mean, the best days for Tesla are behind it, right?
Does the automotive business right now, right here, right now, have to work in order for those future bets to pay off?
Well, I love to hear the skepticism amongst the panel here because nobody mentioned the most important data point, which is they reaffirmed the launch of Robotaxi in June in Austin.
Get on!
And the way to think about this, the automotive business is important because you need to deliver units into the market, which they already have millions in play, that will become prospective robotaxis as they software update the vehicles. The entire business model of this company is going to transform as and if Robotaxi launches, where you go from a one-time sale of the vehicle, as the panelists mentioned, at low margin, to generating ongoing revenue off of every vehicle in fleet over time. And it just transforms the business. So the marginally important news is, can they launch and can they scale that business successfully? We think the evidence is in play that they can, given the acceleration in AI. And we think that delivering incremental vehicles into the market, for now is good to build up that base that will become robotaxis. And in the future, that'll become the robotaxi capability will be a demand driver for their production. They're actually going to be production constrained again to a material extent, in our view, once robotaxi begins to scale across the U.S.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother f***ing right. Real quick, let me go ahead and show you a little something that I saw on X that summed up Tesla's earnings in a nutshell.
Brett, you love to hear the skepticism. I love to hear the optimism because as a futurist, it just seems like pie in the sky sort of stuff. I mean, I mean that sincerely because you've been following this company, you've been invested in this company for a long time. And when have they ever hit any of the targets that you suggest? And by the way, you need to make this transition. And Mel started off asking the question, they have never had their core business so bad. It's never been this bad. And if it continues to get worse in a protracted trade war, you're just not going to have the ability to invest in Robotaxi and Optimus, whatever the hell crap that you guys think is going to happen at some point. So I'm just curious how you think of that, because you are the futurist, and I guess maybe I sound a little cynical.
Well, one, I think you're wrong that their business has never been in worse shape. If you look at their share of overall vehicle sales, they're roughly flat. Trailing 12-month vehicle sales, they're roughly flat. As they deliver a lower cost vehicle, they should be able to sell more units in just on the kind of demand elasticity curve. And as they continue to drive down production costs, I think they'll deliver less costly vehicles to the market. And those vehicles will be utilized more. The fundamental case is when you buy a new car, you're basically buying a bundle of miles at like 75 cents a mile. If you could have somebody drive you around for $1 a mile, that's a great deal, and everybody will take that. And so once robotaxis in the market, then they become a point-to-point transportation provider rather than just a seller of hardware assets. And it just transforms the business model and begins to spit off cash flow to fund Optimus and to continue to fund the AI data center. So we don't see any cash flow issue for the business at all in terms of their ability to fund ongoing CapEx and R&D operations.
Brett, we're just about out of time, but in order for me to understand your bet on the Robotaxi, I have to understand what you think the Robotaxi business will look like, because it seems like there are barriers that Tesla cannot control when it comes to regulate local laws regarding self-driving vehicles, what sort of platform it will use to interface with potential people who want to take Robotaxi rides. I just don't understand how this actually will operate.
Well, Waymo's operating today, and the only reason they're not at larger scale is they don't have enough hardware assets. Waymo's great. I ride it in LA all the time. I would trust my kids in a Waymo, whereas I wouldn't in an Uber. Tesla has a benefit against Waymo in that they're going to be able to deliver a less costly hardware asset, which will determine their price per mile they're able to charge. Waymo is still charging Uber-like prices, and they have an abundance of assets. So you won't have to wait 10 or 15 minutes to get a Tesla Robotaxi. It'll be available immediately. We think Tesla's going to launch their own app that people will download and use in competition with Uber and Lyft, and that individual owners will be incentivized to put their vehicle into the fleet to make a few extra bucks on the car that they already own. And that's how Tesla will complete its network, whereas Waymo has to partner with the likes of Uber to do so. So Waymo's already basically cut down the wheat in the regulatory pathway. And we think they're going to launch Texas and California this year. Those are two very big states. So they'll have a lot of ability to scale within those and probably multiple states over the course of the next few years.
In conclusion, Tesla's earnings, yeah, that's a tough pill to swallow, especially if you're a bear. That's one of the worst earnings docs I've seen from Tesla in quite some time. Don't get me wrong, there's some gems in the dirt, which they called the 2025 Q1 earnings doc. But if you're looking at Tesla from an EV manufacturing standpoint, the doc, the call, that couldn't have given you a whole lot of confidence. But if you're a long-term investor, much like myself, and you believe in Tesla's ability to deliver on autonomy? I mean, I see it every single time I'm in the car. Then you've got to be excited on how confident Elon Musk and the team were about their autonomous future. One of my favorite lines came from Elon when discussing Waymo. The problem with Waymo is that it's gonna cost way more money. This pivot from delivering as many EVs as possible to, oh shit, autonomy is right around the corner, this didn't happen by accident. You can see the progression of artificial intelligence in various different areas, disrupting multiple industries simultaneously while creating a few of their own. This is going to be a weird and confusing time for the stock market as Tesla makes this transformation. My advice to everyone is to try the product for yourself. When Tesla starts generating revenue per mile, in addition to per car, the rocket might already be off the launch pad, headed to the moon. That's all I've got for you today. Be easy. Peace.